So, of course, highlighting the volumes as well. Well, you got the market, which is starting slightly lower. Nifty is down about 0.25%, 24,260. Nifty Bank is starting at about 51,600. It's down about 0.1%. The Sensex is down about 0.25%. Mid-cap index is down about 1/3%. So that's where we are starting at. IT index is 0.6 lower. The IT index on Thursday sold off. I think it ended about 2.5–3% lower. Friday was just about in the green. The heat map coming into view on the Nifty, the 50 stocks, it's what, 35 stocks lower and about 15 stocks which are starting in the green. So overwhelmingly, it's down. You're basically just reversing, that 1 hour 80–90 point gain that we saw during the Muhurat session with this near 0.5% cut on the Nifty so far. But let's get to stocks. Sir.
It's all about autos and extreme sort of, divergent moves playing out. Look at Bajaj Auto. The stock is down 2.5% this morning. And even if you look at the decline from the peak, Bajaj Auto is now the stock that has fallen, the third, stock which has fallen the most from the peak. First is IndusInd Bank, second is Tata Motors, and then there's Bajaj Auto. The cut from the top is now almost 25% from Bajaj Auto. So that's been the kind of price adjustment that's been happening. On the flip side, you have Mahindra and Mahindra. The market is continuing to reward the fact that they're building on those gains, building on the good performance. So 3.5% up on Mahindra and Mahindra. There's some buying on Eicher Motors as well. So that's how it's playing out. There's some buying on Cipla, about 2–2.5% higher. The good run from last week is continuing for Cipla. But again, if I flip it to a Sun Pharma is the poorest performing stock on the Nifty right now because of that legal issue in the US. They won't be able to launch one of the key drugs that was anticipated, and there could be a hit of about 2% I think this year to the estimates, and more than that for next year as well. So Sun Pharma, Bajaj Auto are the two weak names. The Nifty is now down 150 points. Infosys, Reliance, BEL, BPCL, there's L&T as well. Lots of large cap stocks looking at selling. The Bank Nifty is down about 0.5%. So there's Axis Bank as well on the way down. But I think Reliance and Infosys are the two big boys along with L&T. They're really putting in the pressure on the bulls this morning. We don't have much leadership to speak of as of now on the upside, apart from names like M&M and Cipla. There's a bit of buying on HCL Tech and Tech Mahindra, but nothing more beyond that. So it's turning out to be a tough morning. The Muhurat chair was short-lived. And again, we're dealing with a 150-point cut straight away at the start.
Well, that's right, Surbhi. A few stocks that were doing well in the last few days that have come in for selling. Prudent Corp, that's down, I think, close to 8–9%. So the stock had done well, actually, in the past week. That's come in for some profit-taking. Poly Medicure, I think the stock did a 25% run in the past week itself, post its results. But that one as well is lower in trade, and volumes are fairly decent on that one. Lokesh Machines, that's another one that's down close to around 6.5%. So volume's not very high on that one, but that stock is lower. KEC International as well, the stock is down close to around 5% as we speak. So that stock has taken a bit of a hit. Bajaj Hindustan is another stock that's lower in trade. Zomato among the top volume movers. Zomato as well as Suzlon, both of them have come in for some profit taking. So keep an eye out on both those two stocks. Vare Energy as well, it ran quite well post its listing. Listed at around the 2,400 mark. It went down to around 2,250 odd. And from there, it headed towards 3,000 rupees. But today, it's pulled back closer around 100 points. What's doing well? Well, one stock that's standing out is Azad Engineers. They won a big order. We'll get the management in just a bit. That stock, in fact, is running away. It's up more than 10% in today's trading session. And Gillette continues to do well. We had pointed out the stock actually a couple of weeks ago on Bazaar itself that it had done nothing from the end of 2019 onwards. Then it was finding its own. Numbers were quite good. That stock, in fact, is up close to around 5% as we speak. So very few stocks actually gaining. There are only 500 stocks that are advancing, close to around 1,700 stocks that are declining. Prashant.
170 lower on the Nifty now. So 24,130 is where the market is trading at. So this is giving back that Muhurat session gains, but also some more after that. So, that's the picture up on your screen. About 0.7% lower is where you're starting. Lots of names, and I can sort of dive into it in just a bit from now. But, let me count what is easier to count, which is stuff which is higher. So you got Lodha, which is up 6%. That is Macrotech. It's a big mover on large volumes. Max Healthcare, the hospital company, that is up about 3%. It's done very well. Last 5 days, it's come up from lows of about 880 to 1,040. There is CAMS, which is up about 3%. Another one of those names which has done very well was about 4,200 4 days back, at about 4,700 now. UTI AMC, again, 4 days back, stock was at about 1170. Stocks at about 14, almost 1400. So these are all sort of UTI AMC, of course, is also the cheapest AMC name. The other one, of course, is Birla Asset Management Company. But, I mean, it's not moving. UTI is the one which is moving. Jyoti Structures, Reddington, Rainbow Hospitals has had a sharp move. Rainbow has moved from 1300 to 1600. What, seven or 8 days flat. So those are some of the moves that we are seeing at this point. Almost 200 down now, 24,100 is where we stand at. Devina Mehra is our market master of the day, founder and chairperson, MD of First Global. She's with us. Devina, it's always a pleasure. Great to have you with us here. Season's greetings and wishing you and everyone at your end a very happy Diwali and Happy New Year. Just a quick word, Devina, on US elections, and do you think that is the one, and how will it play out? A simple question for our viewers, what they'd want to know is, who's better? Is it Trump or is it Harris for Indian equities?
Good morning, Prashant, and I have happy news somewhat to you as well as to the viewers and everybody in the CNBC team. It is very hard to say what would be better for Indian equities. For one thing, I mean, the whole impact on US equities itself is not that easy to foresee, and this is like a few steps removed as far as their political stance on for example, the Israel war. The Democrats have been just as of hardliner and supportive of Israel as Trump. So it's hard to see, though. I mean, whatever be the other reservations on Trump, I must say the last time he was president, he was actually fairly good for the business and the economy. I mean, he did do a lot of good things. However, distasteful many of his other things are.
Okay, well, I think we'll have the answers. We just have to, it's the cliffhanger. The wait is another 2 days, and then we'll finally know, and then markets can decide what's good or not and make their peace with it. But Devina, the bigger issue is this fall here in India, and it's relentless. Even this morning, when we typically don't discuss markets here and now with our guests at this hour, but it's just an illustration. It's a 200-point fall suddenly with no fresh negative triggers. Now, we all thought it's China first, but the Chinese market is down. Hong Kong is down 10% in the last 1 month. Mainland China is down 6-7%. So this whole exodus of FPI money, I mean, what have you made of it? It's clearly not over. And the market's now coming down to very critical levels. Technical analysts are saying maybe a test of the 200 DMA will happen. What have you made of the October correction in India, which is now moving into November?
Okay, two things. First, of course, I'll sound like a broken record that there is really no correlation between the FPI buying or selling and the market movements over, even when the domestic mutual fund industry was not so big, or even when the retail participation was not so large. So looking at what's happening in China and therefore what is happening in FPI and therefore what will happen to India is totally the wrong lens to look at it. As far as the correction is concerned, this is something that I'd been anticipating for a while. So if you go back to my earlier interviews, I have been saying that, the correction is very much on the cards. It will happen. Only I have been a little nuanced at like two tiers, which is the large cap mainstream stocks and indices. While there will be a correction, I have not been worried that it would be a very sustained crash. And the reason for that is, of course, that 2010 to 20, the returns were very much below the trend line. So you got basically fixed deposit returns for that whole decade. And that created the room for the bull run. We are still not much above the trend line. In fact, we are not even at the trend line. So given that the risk of a sustained crash is limited there, but there have been enough areas in the market which have been very frothy, which again, I have been talking about in my previous interviews also. And that's where you need to be careful, whether it was this IPO frenzy or, there have been phases of this PSU, defense, and all kinds of shady small and micro caps. I mean, there are, of course, good companies there as well. But once this kind of froth comes, then the good, bad, and the ugly, everything goes up. And as the past history shows, many of those stocks never make a comeback. So, that's something you must remember. So to recap, I'm not that worried on the larger mainstream indices, while there might be interim pain. But there are enough areas where things will never come back.
By the way, I just want to mention here that the levels that we are quoting at right now, we're very quickly coming to the lows. I mean, that lower end of this range that we were talking about. Prashant highlighted that. I was also mentioning that. So, yeah, I mean, we're getting very close to testing those levels now, Nigel.
Indeed. We're moving towards recent lows. Actually, the 24,000 mark, that's the round number. That's the number that you do want to break today. So for the time being, though, that it appears the gates opened out. And in fact, the selling just started, particularly in the broader markets. Now we have only around 450 stocks that are, advancing. Well, Devina, good morning and good to see you win as always. Trump will be good, I guess, for the US economy. From an India perspective, who's better?
That's, as I said, speculative. And often, in many of these news-driven things, even the first reaction of the market is not what it eventually is. I have been reading this book called Business Adventures, which talks about incidents which happened in 1960s and 1930s. And so often it happens that, market goes one way every day. The media finds reasons why it happened, and then the next day it goes another way. And then there are enough reasons on that side also. I think this is, and as I said, in any case, the FPI flows do not determine Indian market direction. But we were talking about how much the market is down. I was looking at, you were talking about how much the market is down, and I was looking at past 16, 20 years data, and all of that shows that almost every year.
I think
Devina's network. We lost you there, Devina. If you can hear us, but stay with us. We're just going to try and reconnect that connection in just a bit, and we'll come back to you. 500 stocks are higher, and you've got about 1,900 stocks which are lower. That's a steep one-way kind of a decline that you have on your hands at this point. PVR Inox is down 3%. That's at about 1530. It's down sharply. You've got PG Electroplast, which is down 3%. Just sort of highlighting some single stocks. Supreme Industries is down 3.5%. All on decent-sized volumes for this point in the day. Kirloskar Brothers is down 3%. Look at Star Health. I think Star is down 5%. It had reported numbers on Thursday, was it, or Friday after market hours last week. Stock had seen a correction, but that's a pronounced one coming in this morning as well. I think PCBL, Polymed, some of these names we've highlighted. Vari Energy, big mover on Thursday and then on Friday as well. And that is coming off about 4.5%, 5%. I think Devina is back with us. Devina, please, you were saying you were comparing this correction to the previous ones. Go on.
Yeah, so I was looking at the 16-20-year data, and it was nearly every year you have a double-digit correction. I think there are only a couple of years that are exceptions to that. So it is not so, while you are going through it, it appears very, very massive, but it's not really so. We all know in theory that equity returns are volatile, but when you are living through it, it always seems like the end of the world, but it isn't. If you look at just the move that the market has made in this financial year itself, and we know because we were hedged going into the financial year, we were hedged going into the election results. But now, while we hold some of those hedges still, they are so far away from today's prices that they're not very relevant anymore. So, just don't lose perspective. But of course, there's been this list of stocks that's been circulating on social media even last week, showing how many stocks are down 30, 40, 50% and even more. And that always happens. That the frothy areas of the market, as I said, many stocks never make a comeback. So more than half the stocks that have ever been listed in the Indian market, you can say, have gone to zero. So don't forget that.
No, I think the market's a great teacher. It always tends to remind when you're, in that exuberance mode. And I think we're in that period now. By the way, I just want to point out that the cut on Bajaj Auto is now 4.5%. It has become one of the weakest stocks in the Nifty, but it's not alone. Even Hero Moto, which relatively speaking, if you just go by the numbers, Hero's delivered better sales growth in October than Bajaj. But even Hero's turned. It started positive, and look at the selling come through very, very quickly on that stock. And then the crunching issue for the market really is Reliance. Reliance is down to 2.5%. I think we'll have Mr. Rakesh Sharma join us in the next couple of minutes Before we... Oh, I think he is ready. Okay, Mr. Sharma, good morning. We will let Devina go on that note. Devina, thank you so much for being with us. Great to have your perspective, and we look forward to talking again soon. But it's a market that's falling rapidly. We have a lot of stocks to address as well, so we'll quickly move on now. Mr. Sharma is with us. Sir, first of all, Diwali greetings to you, your team, and all at home. And we wish you a wonderful new Samvat as well. Having said that, now I come to the performance, and I remember that, this was something that you had indicated in our earlier conversations as well. But the market is wondering why so much pressure on domestic sales while exports are picking up. What really happened in October?
Well, good morning and happy Diwali to all of you. Actually, it has been a smashing festive, though it started a little bit tentatively before the Shera. But by the time festive actually closed, it's been, I think, the best ever festive after COVID. At least I can say that from our point of view, that our retails have been the highest ever in this period. And the right frame of reference actually is to compare like for like. It is to compare the festive of this year, which is about 30 days. There's a little bit of a tail of festive still going on in the north. But the 3rd October to 31st October, with a similar period last year, which is 15th October to 10th or 12th November, something like that, because that is the right frame. And if we compare from that frame, then our sales have been, overall sales has been double digit. Our area of focus, which is the top half of the industry, which is the 125cc plus segment, has grown upwards of 20%. We have sold over 200,000 pulsars, which is like way, way above the last high which we had achieved. And even three-wheelers has had a smashing month with about 56,000 units of retail. And I think the previous festive was 45 or 46,000. So a very big difference. The EV business has soared. We've had tremendous sales in the two-wheeler side, touching almost 36,000. A lot of places, units, a lot of places are facing stock outs right now. There is a little bit of stock imbalance. The EV three-wheelers is over 7,000 units, which was, doing about 4,500, 5,000. So when we look at retails, actually, it's rather good news. But if you look at just October to October, it doesn't suggest that, because people are, and particularly if you look at the wholesale sales to the dealers, because October, whenever the festive falls within the month, October then becomes, at least for us, a destocking month, and so will November be. So we look to decode the performance and how we are faring. We look at like-to-like comparison on a retail basis.
Okay, all right. Hi, Mr. Sharma. Good morning and good to see you. Ben, we've taken that clarification on board. So you're telling us that the numbers, the domestic numbers in particular, let's take that piece out of the way. The two-wheeler and three-wheelers, because of the difference in the retail and wholesalers. Otherwise, you're saying demand is strong. You have hit various records. So that will reflect in November as well, right? You'll see some part of that good work that will reflect in November. It's not as bad as it's looking at in an absolute number. Is that correct?
No, at a retail level, it is a very, very strong performance. In fact, as we were entering the exiting Q2, even as an industry where we had thought that industry would sort of clock 8% in this financial year, 6 to 8% is what we had said, it was trailing at about 5%. But now with this super performance in festive, and of course, there would be some bit of advancement of sales from November, December, because nowadays the festive has become, the peaks have become sharper. So, okay. But I think this has bolstered the industry performance, and I think the outlook then becomes positive at, this back to the levels which we were anticipating, about 8%. And in that, the construct is that the top half is outpacing rest of the industry by at least 30 to 50%, So, so it's actually good news that what it is indicating is that people had held back their purchases as they were entering the festive zone in September and then in October. And it all came through in the last 10, 12 days of October. So it suggests that the industry is in good shape.
Sir, we are hearing you and trying to really understand. So I think one point is very clear. You're saying that the retail numbers have been very good. Wholesale has a destocking issue because that, the channel needs to be cleared up. on retail per se, just so that we have the numbers, could you give us the retail growth for the month of October?
Again, I won't look at the month of October, because if I give you the retail numbers for October, they are in the 30% range, because it's an unfair comparison. Because in this October, both the festives, Dussehra and Diwali, occurred in October, whereas last year, only Dussehra was there. So the right frame of reference is to look at the festive of this year, which is 2nd October to 31st, and 15th to 12th November, which is then covers both Dussehra and Diwali. If I take that frame of reference, then the area of our focus has grown upwards of 20% in retail terms, which is the 125cc plus segment. EV two-wheelers is a triple-digit growth. It's almost doubled, more than doubled. Retails have more than doubled over the last festive. And three-wheelers has also, grown at about 13-14%.
So that's helpful, sir. Again, the other number that we'll kind of hold on to is you're saying that 125cc and above, which has obviously been Bajaj's stated, target market, that is where you have grown 20% in retail terms, if we sort of look at the like-to-like festive season. So that's another clue we hold on to. But now let me ask you about the 125cc and below, which I know is not your core target, but I think that's also a segment where you were looking at a lot of potential disruption with launches like the Freedom 125, right? So just take us through what's happening in the 125cc area as well, and what your projections would be in that side of the market, the entry-level segment. What should we expect in the months to come?
So I think, Surbhi, you're referring to the 125cc, the below 125cc, that is 110cc, that is what it is there. There also we have grown, but we've grown in single digit. Our strategy has been through product and innovation to upgrade the 110cc buyer, particularly the one who is, at the upper end of the 110cc. And that we have been relentlessly pursuing through various product interventions. And the biggest disruption was the Bajaj Freedom, which is 125cc. But it is really targeted not just at the 125cc, but at also the 100, 110cc. It is targeted at all those customers. They may be residing in the scooter segment or in the 100cc segment or the 125cc segment, who are rather more sensitive to fuel economy. And because, Bajaj Freedom halves the cost of operations. And it has had a great month. We have retailed about 17,000 units. We have dispatched about 30,000 units. And we are in a sort of a stock out situation. In many cities, for example, Mumbai and Delhi, where the penetration of the CNG network is quite good, we are already finding that within the first month or so, because really September was the first month where we had stocks in the pipeline. And we are already finding that it is commanding a share of up to 9 to 12% in the 125cc segment. So we are very hopeful that this will continue as we continue to sort of get into more and more territories which have got CNG network.
All right, Mr. Sharma, very quickly, on the EV two-wheeler part, you had indicated the way you'll have grown your market share, which is good. It's 22% odd. Could you tell us what is your current updated number? Because it appears y'all and TVS are going pretty much neck to neck, though y'all have gained market share big time, in the last 9-10 months or so.
That's right. When we opened the year, it was about 11.5%. We are at about 20% plus. And we've had and that is basis Vahan. But as you can imagine, the crush of retails has been so high that everything is not getting reflected in Vahan. But that is the case, I'm sure, for everyone. We have a very strong momentum in our retails. And we are making, in another 2 weeks or 3 weeks, we would be introducing a best-in-class product, which would be taking aim at a segment where we are lagging in share. And when we will, hopefully, with that and with subsequent introductions, which will unfold over December and January, we will have a very, very potent portfolio. And I think we should continue this trajectory of sales performance and keep improving our position.
All right. So you're in second place right now. You're holding on to that.
No, if I just look at Vahan, I would say it's a very close third, because I think it's
close
just
third,
about
with TVS.
1,500 units, which is separating the number 2 and number 3.
All right. The domestic numbers are still looking a little bit muddled, though you're sounding very, very confident and optimistic. So we'll take that, in the month ahead as well. But exports is definitely looking good. And that's the bright spot in these numbers. Exports are getting better. What about Nigeria? Earlier it was 15,000-20,000, then it moved from 20,000-25,000 odd. For the last month, what was the number from coming out of Nigeria?
Yeah, like we've been saying, that exports is on a steady improvement path. Nigeria last month jumped up to about 33,000 retails, which is, you rightly recall that it was 25,000 in September. So that's very good. It's a very good sign. But Latin America has done extremely well with the 20% growth. We've also recorded, in the last 12 to 18 months period, I would say, the highest retail numbers in places like Bangladesh, Philippines, and a host of other countries. So all these things will continue to drive the exports business smartly on the recovery path. But, one point which I would like to make on exports is, if you take the year-to-date growth, it's 9% in volume terms, but it's actually 15% in revenue terms. And that captures the fact that the mix led by, markets in Latin America and parts of Europe and Asia have started to really do much better. So really, when we look at the revenue growth and obviously the EBITDA growth, then it's much, much higher than the volume growth.
Okay, all right, Mr. Sharma, we'll leave it there. So good luck. Thank you very much for sort of putting all of those numbers, both local and exports, in perspective for us. We wish you all the best of luck. Thank you. We'll take a quick commercial break here. We're going to come back. 250 points lower on the Nifty, by the way. We'll have the management of Azad Engineering join us to talk about the 700 crore contract with Mitsubishi Heavy Industries. Stay tuned. That's coming up.
Welcome back. The Nifty is under pressure and the broader markets as well are seeing selling. But I'll tell you what, one stock that's bucking the trend is Azad Engineering. It's surging in today's trading session. The company has signed a long-term contract worth around 700 crore rupees with Mitsubishi Heavy Industries to supply highly engineered and complex rotating and stationary airfoils for advanced gas and thermal power turbine engines. We have with us Mr. Vishnu Malpani, the whole-time director at Azad Engineering, who joins us on the show. Hi, Vishnu. Good morning and congratulations. This order seems to be a big one, and the street has definitely taken note of it. Give us a few details on this. What's the quarterly? What's the monthly execution? If you could tell us, how would revenue recognition be of this particular order? The execution timeline and margins you'll enjoy on this. So timelines as well as margins. Please go ahead.
Sure. So good morning. First of all, thanks for having me on the show. I think our journey with Mitsubishi started back in the year 2012. And, Azad, since being in the manufacturing of highly engineered and critical parts for mission and life critical components, the entry barriers in this industry to work with a Japanese client like Mitsubishi took us several years. We started with the qualification of one part and, slowly, engine by engine, part by part, we've come to a point today where, the Japanese customer today trusts us with their, with their contracts, with their part. So today we've reached that point in our journey with them where we should probably be able to scale up our business very, very quickly. And if you remember, I don't know if the street took a note of it or you took a note of it, in 2012 is when we started. 2022, Mitsubishi laid a foundation stone for a dedicated plant for them. So this is an attempt for, from them to increase our wallet share with them. So we are a growth supplier with them. Today we hold about 1%. We are slowly going to increase it to 1 to 2 to 5% slowly. And this contract is a testament to them blocking our capacity and then blocking our capacity for the future, in the coming years. So this is going to really help. And the execution period of this is going to be, in about 2 quarters, 1 or 2 quarters, we should have the plant up. And 3 to 4 quarters onwards, we should start generating the revenue out of it.
And
so
margins?
That's where. So the margins are going to be pretty consistent with our existing, so we are going to have, similar margins, blended margins as a company. So I think that is not going to change. So any order that we take in our business, generally is at a blended margin of 32 to 35% at a company level. So we ensure that is always done. So the margin remains. Yeah.
Got it. Vishnu, hi, good morning and congratulations. I think all of you must be thrilled, right? I mean, as you said, to get to a point where you're able to work with a client like Mitsubishi. So absolutely great news. Just a quick word. This is a long-term contract, which means this becomes a kind of a recurring business for you. And what should we expect?
So this is this is a recurring business, obviously, for us. We are qualifying parts, and today we finished qualification of most of their part numbers, right? And for some of the parts that we are manufacturing for them, I think we are the only supplier outside of Japan. So this is in conjunction to that. So this is going to be a recurring revenue. This is a 5-year contract of 700 crores that we've done. And, so these contracts generally get renewed after a longer period of time, etc., when it comes to the closure. So in terms of, for Mitsubishi today, you should look at it as, Azad is probably the best cost supplier and also in terms of quality. So we are providing those solutions to them. And that is why this contract is more like, tying down our capacity for the next 5 years to be dedicated to them for a single client. So that.
And after 5 years, basically, post the execution of this, you kind of look at another one. And there are price escalation clauses, etc. in this, or this is a fixed price?
So these are standard, long-term contracts that happen in the industry. So so this is a long-term contract and pricing agreement. So this details, the pricing that is going to be there for the next 5 years. So it's nice.
Vishnu, you said that I think right now, in terms of Mitsubishi's supplier base, you are at 1% and you want to go up to 5%, right?
So the aspiration is to grow our wallet share. I think, if you recall any of our previous discussions, we've constantly been talking about how we are targeting an addressable market of $28 to $30 billion. And today, wherever Azad is, we are at about 1.5%, 2%. So our endeavor is to grow our wallet share with each of our customers. And, any player that we compete with globally today has been around for 50, 60 years or probably more. Azad's been there for about 14, 15 years. So I think it's our constant endeavor to increase our wallet share, and I think this is an opportunity or a testament to what we've been saying. So
No,
this
absolutely.
is
No, and the markets are taking note of it. The markets are extremely happy with the kind of association that you're making with these global majors. Also, you're getting orders from Honeywell. So just now, give us a breakdown of the order book. How much is now Mitsubishi? How much is Honeywell? And with these kind of big orders coming your way, especially in the last couple of weeks, what is the order book growth that you envisage for this year and next year?
So I think so our order book has grown significantly since our IPO. If you remember, around the IPO, we were at about 2,000 odd crores. And if you net off the Honeywell and the contract with Mitsubishi, we were at about 3,200 crores roughly. So this would add another 1,200, 1,300 crores in addition to what we have. So we are looking at about an order book of upwards of 4,000 crores as we speak right now.
And this would be executed over how long? 4,000 crores covers you for how many quarters or years?
These are different contracts put together. Some of them are for 3 years, 5 years, 7 years, and 10 years. So these are long-term contracts from that perspective. Yeah. Okay.
So you're right now at 4,000 crores, and just give us some projections in terms of the pipeline ahead. What is the order book growth this year? And as you're looking at a scale up with a lot of these MNC giants, what would the order book projection be, say, for even next year?
So I will not be able to comment on a lot of numbers, but I can tell you that we have contracts that are being discussed with customers at an advanced level, and I think you will see a similar growth in our order book that you would have seen so far in the market. So we have the next few months where in a week or so we should be coming up with our results, and we should talk about it in greater detail at that point, I think.
Well, we'll push you for more. Yeah, we'll push you for more numbers at that point of time. But I just want to understand, because I'm looking at your quarterly run rate, you're still going at around 100 crores per quarter. And this order of 700 crores, as you said, you'll start executing it in the next 3 to 4 quarters. So your quarterly run rate will have to go up, right? Do you think this entire 700 crores gets executed over FY26 and FY27? Just want to understand that. I missed that part.
No, so it will be executed over 5 years. So over 5 years. So we're building an independent plant for them. We should take about 2 quarters, and then we should ramp our business up with them over 3-4 quarters. So we should start supplying to the new plant. But talking about our quarterly run rate, see, about 4 years ago, we were doing about 100 crores per annum, right? So from there, 100 crores a quarter is a big sort of jump in terms of us utilizing building capacity and then utilizing it. I think similar trend is going to be continuing because we're constantly, like you see, our order book is constantly getting added. So we are also building capacity with the new plant coming in. So I think it should all...
Got it, Vishnu. I understood that point. Over the next 5 years, you'll be executing this entire contract. Very quickly, we don't want a fixed number for the coming fiscal, but I'm going through an ICICI Securities note, and they are very, very bullish on the company. They are targeting the number. They're saying they're at around 1% of the targeted market. They're expecting you to go to 7 and then to around 10%. But they believe that you will grow by around 25 to 30% consistently over the next 10 years or so, all the way till FY23. Would you believe at current juncture that's on course?
Yeah, at this point, I think we're in the process of finalizing numbers, and in a board meeting, etc. So I would not be able to comment on the short term or the long term guidance, but I think give me a week or so and we should be able to talk about this again.
Okay, well, we'll leave it there. Thank you very much for joining us, Vishnu. Appreciate you taking out the time and being here on CNBC-TV18. Thanks indeed. Good luck. Narayana Health is the next management on the program. The hospital recorded an in-line set of second quarter numbers. Revenues came in healthy, but EBITDA margins contracted. International business revenue fell at 19%, largely due to a slowdown in patient volumes from Bangladesh. We have Sandhya J, Group Chief Financial Officer at Narayana Health, now joining us. Sandhya, good morning. Great to have you with us here on the program. Thanks very much for joining us, as always. I want to start with exactly that, the international business, international patient volume. Could you talk to us about that 19% drop that you saw? What is the situation in third quarter so far? What is it as a percentage of your overall numbers?
Sure. So first, let us start with the numbers. Our international business last year, same quarter, was about 8%, above 8%, 8.7% actually. That has dropped to 6.6% this year. So we've seen that kind of dip, and that's why you're seeing that 19% year-on-year drop. We haven't seen any significant improvement in terms of the international numbers. One, because there is a visa restraint that people are not able to travel. And second also is that in Q3, even otherwise travels are not as robust as they are in other quarters. So we are anticipating that we will continue to see decline in the international business. Having said that, we've always guided that our endeavor is to be able to show growth in the domestic business. And that's where our focus has been. So to that extent, we are very happy that we've been able to report a 13.5% growth in the domestic business, which has been able to offset the impact of the losses that we've taken on the international business.
So what could be the domestic business growth, Sandhya, for the full year then?
We aren't guiding that number, but we can definitely expect in line with the performance that we have delivered so far. And improving from here.
This international patient volume drop-off happened in Q2, right? I mean, started in Q2, essentially.
It had started in Q1, but because there were already patients who had come into India, so there we were finishing off the procedures, but further travel had got reduced significantly. So therefore, the full impact we were seeing in Q2, and it is only, I don't think it's going to get better from here. At least in the short term.
Okay, all right. So we'll have to take that on board, that the international patient contribution will perhaps remain under pressure. But let's talk about the domestic business, Sandhya. Give us some color on how occupancies have been and how, whichever metric you look at, average revenue per occupied bed, or I think you look more at revenue per patient, right? I remember that conversation always. So give us some color into how revenue per patient has improved this time.
Sure. So just a little step back to the context of the domestic business. There are like two sides to that performance. One is our flagships were under some pressure in this quarter. One, first, because of Bangladesh, we already spoke about, but also because Kolkata is a very important portion of our mix, and there was a lot of political tension in Kolkata. And therefore, that part of the business was under some amount of stress. So that's one side of the picture. The other side of the picture is the other units, which is the non-flagship units. All of them fortunately performed quite well. In fact, many of them hit their highest ever revenues. In fact, we ourselves as a group have hit our highest ever revenue this quarter. We've crossed 1,400 crores as a milestone. So it's like a little bit of impact from international and from the political situation in Kolkata, but also a lot of improvement in terms of the performance of the rest of the group. So that's just a broad context. In terms of our average revenue per patient, the IP ARPP, it moved to 1,35,000. It was 1,29,000 last quarter, and 1,18,000 the same quarter last year. So that's a healthy 14% YOY and close to 4% quarter-on-quarter growth. In terms of footfall, our total footfall was about 7.7 lakh patients this quarter. Again, that was almost a 9% growth quarter-on-quarter. So again, a good growth in footfall. Having said that, this number is moderated because of the impact on the flagships.
Just rechecking the number, your average revenue per patient stood at 1,35,000 in this quarter versus 1,29,000. That's in Q1? Or
yes,
was it the previous
Q1.
year? In Q1. Okay, so from Q1
year.
It's improved. Okay,
yes.
Okay, that gives us some sense. So Kolkata and Bangladesh lending some pressure to the business.
Indeed. Sandhya, what about your occupancy? I missed that number. Was it at 60, 65% is what we were talking about the last time around? It's in that vicinity?
Yes, we are in that same range, though our non-flagships have seen greater than 70% occupancy. So that's been a very healthy occupancy across all our non-flagships. Flagships have had a little lower occupancy.
Okay, all right. Let's focus on Cayman then. Your operations out there saw a decline of close to around 7%. You have commissioned a new unit as well, which in the near term could be a margin dilutive. So could you tell us how do you see that business shaping up from here on, and by when can we return back to normalcy in terms of margins profitability?
Sure. So we did see some scale down in terms of acute high care procedures because we were getting ready for the new hospital. So some of the doctors took early leave to ensure availability when the hospital goes live, etc. And also because the revenue base of Cayman is very small, so small variations bring that fluctuation. There was one more event was like that there was a shutdown for about 7 to 10 days in August because of hurricane. So we almost lost 10 days of revenue during that period. Cayman is a hurricane-prone geography. And then during that period, transportation, etc. gets severely impacted. So this resulted in a dip in revenue. But the costs were all fully loaded up because the hospital is ready for commissioning and we're going through the approval process. We've got one set of approvals as of last week, and we have to get another set of approvals, which will happen over the next few weeks. So therefore, we are also seeing the full effect of the dilution, which is coming because all the medical hiring is done and all the overhead costs are being incurred, but there is no top line coming in from the facility. So that also is impacting margins. We've always guided that we need at least 4 to 6 quarters to be able to bring back the full scale in terms of margin. Just I want to give a little color saying the underlying margin of the India business has actually grown. The overall dilution has come mainly because of Cayman and because of the investments we are making in integrated care. So that dilution impact which is coming on from Cayman will slowly taper down over the next 4 to 6 quarters.
Right. So in the near term, we should work with a margin band of around this 23 to 25%. Would it be fair?
I do not want to guide, but it sounds fair.
Okay. All right. You have lined up a big capex, as you've mentioned in the past as well, of more than 1,000 crores. But the street would be interested to know about the return ratios, ROE, ROCE. Is there any target band you're looking at? I was reading a couple of notes which suggested that you'll be in that vicinity of around 22 to 24%. Would that be, an aspiration?
Definitely. The only point is that a lot of our capex investments are happening in greenfield assets. So, which means that during the build-out phase, which is the next 3 years, there would be the capex coming on the books, but we will not have commensurate revenue. So, all these assets have to start delivering return to be able to hit the target ROCE band. So, there will be a period in the interim where ROCE will dilute. So as you would have already seen from Q1 or Q2 of last year to Q2 of this year, you've seen a ROCE dilution because of the investments we've made in land and the Cayman capex going fully live, etc. So that dilution we will see in the short term. But once all the assets go online and the returns start coming in, we will go back to our target ROCE.
And that is 22 to 24%.
Upwards of 20%, yes.
Okay. All right. Sandeep, we'll leave it there. Thank you very much for joining us. Appreciate you being here on the program. Good luck and speak to you again soon. By the way, at the bottom of the screen, the second big IPO to list at a discount. The first one was Hyundai, which listed at a discount. Afcons becomes the second large one, which has made it to the market below the issue price, which was 463. So it's listed at 426, now at about 447, which is about 3.5% lower at this point. Look at the volumes, tremendous, huge. That's a Shapoorji Group company, and it's a new listing in the market. I mean, the market, of course, has been under pressure with about a 1%, a little over a 1% fall on the Nifty at this stage. We are trading below the 24073 level, which is the 25th of October low. So the next kind of, you could look at all sorts of levels, but the next number which we put out was 23,893, which is essentially the low that we saw on the 5th of August. That was a swing low from where the market sort of, saw a one-way kind of a move all the way to a new all-time high in September this year. So 23,893 is the next sort of support on the downside as we look at levels from here on. Mitesh is with us with what he'd want you to do with this kind of a market. Mitesh, good morning again. Thanks for joining in. Almost a 300-point fall now. What would you recommend?
So, Prashant, one, I think below 24,170, we have added onto our put spreads on the Nifty. My belief is that the next level is 124,000 being a round number, and, the open interest on the option side. That's the first target, and we've kind of just touched that. And the other one is 23,570, 600 zone. There's a weekly average, there's a weekly there's a gap on the daily charts over there as well. So I think there's a good chance that we might actually, head towards 23,600 or level just below that. And unless until we start capturing 24,250 again, I think the view would be to sell on rallies. Having said that, on the stock side, I have a sell on GNFC. Keep a stop at about 615 here. Look for a target of around 575 to about 570 on the downside. And the other one is a sell on Hindalco. With the stop at about 685 and a target of 650 on the downside.
What a morning it's turning out to be. 300 points gone, 24,000 bulls finding it very, very tough to defend that. Mitesh, thank you very much. This is a tough-looking screen. Prashant, it's almost as if whoever's the new US president is going to sanction India or, I don't know, put 200% tariffs on us. The way I think this kind of a sell-off, the ferocity of the fall, I think probably it took a lot of people by surprise this Monday morning.
I think so too, Surabhi. At least I don't think anyone expected. But, we'll see. You've got a full day in front of you. And it's still 1.25% kind of a fall. Yeah. I mean, it looks, of course, in point terms. But, it's an index which is at 24,000. Just breaking 24,000 now. So we'll have to keep an eye. I mean, the broader market is looking, actually, it's looking even worse because almost, 5:1. In favor of declines is the number out there. So very few things up in the green. The vast majority is down and out. There you go. That's essentially the 5:1 declines to advances ratio that we are looking at. So some nervousness ahead of US elections, all of that, of course. But I think it's a reversal of the Muhurat day gain, which was worth about 100 points, and then some as we move into the second hour of the trading this Monday morning. I think we'll take a quick commercial break here. Commodities in focus. Manisha is going to be here with just that. Stay tuned.
Okay, well, it's a crunching fall for equities here in India. Let's figure out what's happening elsewhere in the world, especially in the world of commodities. We've got Manisha joining us. Manisha, what's top of mind for you right now?
Well, Asia, for one, has started on a positive note across commodities, and that is because the dollar index has declined below 104. So that clearly has been supportive. So whether it's about precious metals, industrial metals, and for crude oil prices, we are starting Asia with stronger gains here. especially for crude oil prices, where it has been a remarkable increase here. We are trading above $74 a barrel for the Brent prices. And this is after statements coming in over the weekend that OPEC and allies will delay their planned output hike of 180,000 barrels per day by 1 month. It has been delayed earlier once as well. This was done by 3 months, and now with 1 month more put forward, that means that the output cut only will begin by 1st of January 2025. Well, we have seen crude prices under pressure because of weak demand, especially from China, and then there has been higher production continuing from non-OPEC as well. OPEC has slashed nearly 6 million barrels per day in the last 2 years, and that means that this is the kind of spare capacity that OPEC has. So even if it does not increase output, that tells you that there is enough spare capacity in the world and there is oversupply. And then when you look at the US markets as well, we are looking at record high productions there. And the US presidential election candidates, both of them, by the way, have promised to increase oil production going forward. So this is one commodity which is really not bothered on who comes in as the new US president. Whoever comes has promised higher oil production, opening up of shale gas. So that tells you that more production is what we could be looking at going forward from non-OPEC as well. And then you have plenty of events happening in this week. The US presidential elections is going to be one part of it. You have the US Fed rate meeting on 6th and 7th. That decision would come in on 7th of November. And then the US PMI trade data that comes in between Wednesday and Thursday as well. More importantly, it's not just about the US Fed meeting. You also have monetary policy meetings coming in from UK, Australia, Brazil, Poland, Norway, and a couple of more countries there. And then more importantly, China could be spending or giving out $10 trillion worth of stimulus. That would mean more demand coming in from China, which also is positive. Many of the industrial commodities and the crude oil prices seem to be taking stems from that as well.
Okay, all right, Manisha, thank you very much for that. So let's see what are the cues that we're going to get from those two major power centers, the US on one side and China on the other. It's a big week, and I think nerves are really showing up ahead of that. Well, with that, I think we have a couple of stocks to look at before we hand it over to Lata. Vinny is joining in. Sun Pharma has obviously had a rough morning along with the rest of the market, but Sun Pharma has fundamental news surrounding it as well. Vinny, fill us in.
Absolutely. The fundamental news is because the U.S. court, the district court in New Jersey, has granted a preliminary injunction for Inside Corporation against Sun Pharma. This was specially for the drug, which is Lexarvy. Now, this drug was expected to give Sun Pharma a revenue in the next 2-3 years that we would look at would be somewhere around between $200 million to $300 million. Now, obviously, that is something that has been delayed now, and that is why we are seeing Sun Pharma see a bit of a fall in its stock price today, 3-4% downtick that we're seeing. In July 2024, they'd received this approval, but since then there have been problems. So now everyone was watching out for this clearance coming in, and this delay is something that is impacting the stock price today. Now, Nomura also is saying that, they could expect some bit of an earnings impact coming in because of this drug in FY25 around a 0.4% impact, FY26 a 3%, and in FY27 a 5% impact on terms of the earnings of the company. So keep an eye out on that, some bit of an impact going forward as well.
Okay, all right, Vinny, thanks for that. Well, the bears are catching serious momentum on the way down. What was a 300-point fall till about 3-4 minutes back is now a 350-point fall. So, yeah, this is, unusually heavy selling for so early on as you start a big, big week where cues are coming in. Maybe, Prashant, it's just, I think, just people taking positions and perhaps being on the sidelines if they already weren't ahead of these big events?
I think so. I mean, some amount of liquidation, right? Yeah. I mean, I don't think anybody would take a one-way bet, right? I mean, taking a short position or something of that sort. Maybe just some sort of profit booking. Because we did get a bit of a rebound. I mean, very, very short-lived rebound after the sharp selling that we saw. And many of those, I mean, if you look at stock specific, these are all names which had rallied quite hard over the last 2-3 days. I mean, take a look at the recent listing like Vari, etc. But of course, it's not limited to a few, but some of the big volume-led gainers across the broader market are all names which rallied in the last 3-4 odd trading sessions. So, some of that, of course, getting unbound as we head into the next 3 or 4 days. And actually this week you've got, we'll have a new US president by Wednesday morning. You'll have the China stimulus somewhere in the next 3-4 days. And of course, a 25 basis point cut from the Fed on Thursday as well. So it's a big one. And I think a little bit of a softer kind of screen, a bit in the red as we go into all of those things. Well, we'll take a quick commercial break here. We're going to come back. Lata will be in conversation with Mithil Kotecha of Barclays, Neeraj Gambhir of Axis, and they talk about what else, but the implications of a Trump or a Harris victory on rates, currencies, emerging markets. Stay tuned. That's coming up in just a bit.
Today on It's the Economy, we are discussing the obvious, the US elections. On the face of it, a Trump election is seen as higher tariffs, lower corporate taxes, and higher fiscal deficit. This translates to higher equities and lower bond yields because both higher inflation and higher supply of treasuries to bridge the deficit would be bond negative. But let's discuss more. What's the impact on emerging markets and more so on India? I have with me Neeraj Gambhir, the head of markets at Axis Bank, and Mithul Kotecha of Barclays Bank. Gentlemen, good morning and thank you very much indeed for joining me. Mithul, let me start with you. Is something priced in? I mean, we're seeing equities fall, Indian equities, Chinese equities. So is the market already pricing in a Trump victory?
I think that's the way that the market has been moving in recent sessions. And what we've seen, notwithstanding an Iowa poll over the weekend, which did seem to show Harris taking a lead, but generally the betting odds and the market has been shifting towards a Trump win. And even though it's still very, very close, and I think we've seen that. I mean, for example, we've looked at the premium that's in the US dollar, and we think the dollar premium is already about 3% priced in for a Trump victory. That's just in the DXY. And, you know, I think you could argue the same for other assets as well. So that said, if we do see a Trump win, we could still, in our view, see some continued moves in the same direction. But some of that is priced in already. And of course, if Harris wins, you would see a reversal of some of that premium that's been built in on expectations of a Trump win. So, for example, you could see a weaker dollar and lower rates to some extent as well, as US rate markets have been selling off under the expectation that we would see much wider fiscal deficits under a Trump or a red sweep outcome coming through in the elections.
Oh, yes. I mean, 4.38 on the 10-year after dismal jobs data clearly indicates that they're not pricing in a weak economy or rate cut, but rather a Trump victory and perhaps higher tariffs and higher inflation. Neeraj Gambhir, thank you very much for joining. What would it be from an Indian point of view? I'm not asking you an EM point of view, because a China reaction and a South ASEAN reaction would be very different from India, which has a much less cantankerous relationship with the US on trade matters. So what would be the outcome for India if it's a Trump victory?
So first of all, on the fixed income side, I think if the Trump victory means significantly higher or even somewhat higher from here bond yields, I think it's in general bonds negative across the world. And I think domestically also we've seen the bond yields actually react to it, although in a very sort of calibrated and muted way. Only 10 basis points higher moves so far, but it certainly kind of makes the whole story about a sustained lower interest rate regime in the US a bit questionable. The second point is on the currencies. I think currencies, if we see Trump victory resulting in a stronger dollar, then obviously it is all EM negative, and I think we'll continue to see an impact of that on Indian rupee as well. Although Indian rupee seems to be very, very range bound right now, well managed in terms of central bank intervention, and its move so far has been one of the lowest in EM. So I think that we will see some bit of a muted response on both the sides because both these markets eventually react a lot more to the domestic data as compared to the international data, but there is going to be some rub-off effect of higher yields and the higher dollar on the domestic markets.
But Neeraj, the extreme reaction seen in case of a Trump victory is the raising of tariffs on China. And of course, in general, that's at least the rhetoric. If that were to happen, China would react with depreciating its currency. And the expectation is that India will have to do competitive depreciation. So does a Trump victory mean weaker rupee? Can we go with that equation?
A lot of this will play out over the next 6 to 12 months period after the US president is inaugurated, which is in January. So there is a lot of talk right now. There is a lot of rhetoric right now, but how much of that translates into actual action remains to be seen. I think if the higher tariffs are probably given at this point in time, but does that mean a 10% global higher tariff as Trump has talked about, or a 60% tariff for China? I'm not sure how much of this is negotiation tactic or how much of this is actually going to be implemented. In general, if you see higher tariffs from US, it also basically means higher inflationary environment in US, right? So that is, again, in some senses, the question is whether Trump wants to see a stronger dollar or a weaker dollar. So there is a lot of these variables which are at play at this point in time for us to take a very strong directional call. I think we need to see how this entire story plays out and how the entire tariff, impact plays out over a period of time. But yes, if they follow through with higher tariffs across the board, and we see continued strength in the dollar, then obviously it is weakness for emerging market currencies. Again, I'm saying that Indian rupee is very well managed. It is basically very strong central bank hand at this point in time. So I'm not sure if we will see the same level of weakness in rupee as we would probably see in some of the other emerging market currencies.
Yeah, I guess the more less affected both in terms of economy and currency. Mitul, nobody is pricing in. I mean, we should also consider a hung government, right? A deadlocked government because of different majorities in the presidency and in Congress. If that were to happen, if that were the outcome on Wednesday morning or by Wednesday evening, what should we be prepared for in terms of currency and rate reaction?
Oh, look, I think that would certainly, if there is a split Congress, it would certainly send a more muted signal to the market, right? I think clearly what we've seen is a reaction here potentially to a red sweep or a Trump win being more extreme. And the chances of a blue sweep seem to be more limited because at this moment in time, the polling seems to show that Congress, in terms of the Senate, is more likely to shift into Republican hands. The House could stay Democrat, but again, it's a close call. But the chances of a red sweep and a Trump win seem to be higher. But if there is a split Congress, some of the more extreme policy measures, probably on either side, would be tampered down. And in that sense, you may even see a bit of relief in markets in that sense. Rates may be more contained and therefore emerging markets may find some relief. The dollar may also lose a bit of steam in a split Congress, and you may see some relief there as well for EM assets. But overall, I think we are gearing up for a very binary outcome at this point in time. There is a lot of de-risking that's been taking place among investors in the last couple of weeks or so. So we would also see a very significant chance of an increase in volatility post the election outcome, either in any outcome, where we could see this sort of binary event coming through. And so, again, I don't think that emerging markets are out of the woods. I don't think asset markets generally are out of the woods. I would agree with the comment that the Indian rupee and Indian assets are far more isolated and unlikely to be impacted as much, especially given the stance that the RBI has on the currency, and we may see some resilience there. But again, I think the implications may still play out in the next several weeks. We may not even get an outcome so closely or soon after the actual election itself, and there's a risk that it could drag on for some time.
Okay, then very quickly, can you give me some ranges, Mitul? There is a view, of course, that, as Neeraj pointed out, this rhetoric is more to get bargaining power and not exactly actually implement 50-60% tariffs on Chinese goods and across the board 10% tariffs at all. Tax cuts perhaps are more likely. So in that event, do you think, what is your range for the dollar index? What is your range for the US 10-year?
I think in terms of the dollar index, firstly, look, as I said, we've got a bit of a premium that's been built in. We could still see a potential 3% trade-weighted gain in the dollar index in the wake of the election outcome if Trump wins. So we could see more upside there. We haven't got a forecast for a dollar index, but we would still see potentially an average move around that level. But we would see the CMY on a trade-weighted basis, if there's 60% tariffs, could drop around 3-ish% on a trade-weighted basis, more on a nominal basis. Other currencies that we've looked in Asia, like the Korean won, Thai baht, would also be quite vulnerable and could fall quite sharply. So again, the bottom line is it would suggest dollar higher, US rates also higher. But again, as I mentioned, rates have already moved a lot in the US. Part of that is on better data in the US. So we may not see such a sharp move in US rate markets on the back of it because so much has been priced more recently. But look, it's unlikely that US rates are going to come off quickly if Trump wins. We probably may see a knee-jerk sell-off. The yield curve may be moving higher across the curve in our view.
Yeah, I mean, the Chinese currency has fallen significantly. It was, I think, end October 29, I remember seeing 7.14, even more, 7.15. And now it is 7.08. So clearly we are seeing a lot of reaction over there as well. Neeraj, what would be the ranges you will work with for the rupee and Indian bonds? By the way, Indian bond yields have also risen from, what, 6.7172 to 6.8687 now.
Yeah, so I think assuming that we have an extreme case of Trump victory and markets move quite significantly post that, I think I still will see, 10-year bond yields capped at around 7% for now, because I think even the US reaction may be a bit extreme, but I think Indian reaction will be somewhat more muted. On rupee, I think even a 1% move is difficult to imagine. We're currently at about 84 level. I would think that beyond 84.5 or maybe 84.75 in the worst case, I think it's very hard to imagine that rupee will move. So I would expect somewhere close to 0.5% to 0.75% move on rupee and maybe another 10 to 15 basis points on bonds. But that's really if the markets are actually quite volatile in US post the election results. By the way, I agree with the comment that we may not have a result for quite some time in US. In that case, the markets may need to contend with this volatility for some more time.
Okay. Let me end with a monosyllabic answer from each of you on what is a more certain event. What do you expect from the Fed, Mithul?
That is definitely more certain. Look, we think 25 basis points this week, 25 in December.
Neeraj?
I think 25 this week is given. I'm not very sure of 25 in December.
Okay. Well, as you say, we have to be prepared for a much longer and a great deal of uncertainty. Thank you very much for educating us, bringing us up to speed, Neeraj and Mithul. Thank you very much for watching the show. We wrap up on Bazaar. Chart Post is coming up.
Hello and welcome to Chartbusters. I'm Nigel. With me is Manglam. Well, the markets are under pressure, but we have got a new kid on the block, that of Afcon's Infra. They've listed at 7 to 8% discount in comparison to its issue price. We have with us Mr. Srinivasan, who's the MD of the company, to discuss more with regard to how things are shaping up. Hi, Mr. Srinivasan. Good morning and good to see you, Ben. Well, the stock listed at a discount of around 7% odd, but that dip has got bought into.